Good afternoon. Happy Friday. Welcome everyone to the Market Watch Group Weekly Market Wrap. My name is Scott. It's a little past 3 p.m. Eastern Time. As always, I'd like to remind you that what we do is for education and illustrative purposes only. Nothing we do, none of the information we provide is intended nor should be construed as a recommendation to buy or sell any financial security or product because we're not brokers or advisors. We're going to do this. Today's market, we're going to revisit our posture. We're going to talk about what we do with trades carried for the weekend. What are we looking at for next week? Look at the overall list, talk about our trading plan, and answer this question that came in during the opening sit around. On a trading log, once you have done 100 trades, do you do a new log? Yes. I like to put a summary at the just in the first A whatever, column A whatever, right underneath the log itself. Like what's the wrap up? What are the lessons learned? Like, what are you trying to like process it? In fact, you know what? I'm going to formalize that. That's a great call out for wanting that. Phased and confused. Love it. But yeah, we need to process it. And then we need to kind of say like, what's our objective for the next 100 trades? It's an iteration. So you're going to say like, what am I going to do differently? Like, what could I do better after these 100? What did I do good that I want to keep doing? It's my Bruce Lee process improvement, right? Adopt what is working. Eliminate what is not. Add what is uniquely your own. Those are your three core objectives. Assess what was working. What did you do well that you want to make sure you keep doing well the next 100 trades so that you're building on the foundation of consistency and repeatability. If you can acknowledge, oh yeah, what do we do, right? Like, again, I always go back to coaching 10-year-olds in soccer. If they can describe how they expect to score goals, they're going to score goals. They're going to work it the way, like if they're just like, we want to kick the ball in the back of the net, they're going to kick it around. No one knows what to do, right? But if they know how they move the ball, where they move the ball, who's going to score goals, and what's the opportunity they're likely to find, now it's dangerous. And that's the same thing with us, right? And then it, as we go, we want to look to improve it, look to, iterate on that. So that's step one. What can we adopt and make sure we continue? Step two, what was not good? What did we do? Where's the mistakes? Where's the okay? It's 100 trades. We're not looking for the one, I need a list of 98 mistakes right? I need what did we do, 2 or 3 times or more? Was there any patterns where it's okay, stop it. Scott, stop it. What are we eliminating? And then the third one is really, I think, the most important, and that is add what is uniquely your own. So what are your observations where you're like, you know what? If I X, then Y might happen. A little bit of the scientific method here, right? Like have a hypothesis and say what are we trying to do? We're trying to let our winners run better if possible. We're trying to cut our losers short if possible. And we're trying to improve our entries if possible. 3 things. It's not that complex when you boil it down to how are we trying to improve? What are we trying to do to make those improvements? Now, whether or not your if X then Y hypothesis actually produces what you thought, that's a very different story. I have plenty of times that I'm like, I think if I do this, and then it's the butterfly where you're like, yes, I did do a little better with my winners, but my losses increased even more and my ratio dropped. And that's whether it was that or something else, we can try to isolate it and see. But that's what I mean when I say this is trading deliberately, where we're really looking to do things on purpose. Everything is evaluated. Everything is now what? So this is why I'm saying our trading plan, our rules that we have, this is at the end of 100 trades where you might actually adapt and make a slightly different rule. And then you move forward thinking, here's what I expect to see on the next 100 trades. and you're able to compare the two. And I tell you what, when I tell you guys, Glenn and I can get you 80 to 85%, that process is the last 15. The last 15 where you're really like, I'm doing my thing and I'm finding those ways to let my winners run. Scott tells me he does this sometimes. That may or may not resonate. It may be something you can replicate. When you do it, it's yours. It's right. That's repeatable. That's anyway. Soapbox moment over. Let's go. Let's go. No, I knew that would be a good rabbit hole. That's why I wanted to wait till I could record it, right? I knew that rabbit hole would be quality. Roblox just won't give us an actual. I was like, should we take that in golfing? I was thinking about it, and then I don't know, you guys. Kareen's waiting. Let me grab her. Hi, Kareen. I hope you weren't waiting long. We literally just barely popped off of our welcome slides. But we did have an interesting soapbox. So go back and watch the recording for the 5 or 7 minutes. We talked a little bit about trade logs and stuff. Anyway, it was interesting. Yes. So let's go do the thing. We try at least anyways, right? We try. Let's talk about the SPY first. What did the market do today? I mean, it's I would say it's a hiccup. And a hiccup is not horrible. In fact, hiccups really can only occur in more bullish conditions. What is a hiccup, Scott? Somebody out there is asking in their mind. I read your mind. Oops, that's a little too far, but we'll live with that. That was a bullish move. We liked it. Pulled back. That's a bullish consolidation. We liked it. It turned and signals. And what? We liked it. I mean, like, none of this is like, what? What did you think you saw? I mean, and then what? And then it just sort of hiccup, right? That's why, I mean, it looks like a hiccup, doesn't it? Like it hasn't gone wrong. Support's down here. You're not wrong on a bounce trade without it breaking, right? Here's an easy rule. In trading, I look at rules two ways. There are trading systems, and within the context of systems, there are rules, and then there are just generic trading rules. Things that where you just are sort of defining your philosophy. I put things like losers average losers, or one of my rules says I don't buy weakness and I don't sell strength. Another one of my rules is, can we see the Heiken Ashley? Yes. If the original reason for getting in the trade is no longer valid, get out. It's pretty good, right? If the original reason for getting in the trade is no longer valid, get out. That's not a wait for it to, stop out rule. That's a define what makes a rule valid. And then, go from there. So here's the deal. This is a bounce trade. What's the original reason? It bounced off support. Therefore, when is it broken? It breaks support, which is right. Now, you might look at the Heiken Ashley and say, I'm trading this momentum. And we're a little more fluid. I'm going to go yellow. Give me a second. Yellow. This is a little more fluid, and the red's a little more hard, where you're like, if it goes down, now if it touches it intraday and pops back, am I wrong? Is it? No, this is a hiccup. I can't even remember where was the original thought process for the stop on this. This isn't even a trade. Sorry, thought we were looking at a trade for a second. We don't even have a trade on this. This is just market context. This isn't wrong. This is the buyers started to come in. They've paused. Have the sellers come in? Not at all. Right? Not at all. Let me go back. There's a pause, and you can see there's a shadow they tested. And what are we seeing? Even now, at the end of the day, there's the sellers. They tested. Boom. Buyers come back. 10% sellers, 90% volume breakdown today. So, yeah. Do I look at any of these and say, oh, you know what? I'm wrong. No. So what does that mean I'm likely to do? Carry it through the weekend. Yeah. Thoughts? Are you carrying through the weekend? Are you closing? Are you tightening stops? Let's have a chat about it. I got off my soapbox, so we're no longer monologuing. We're now dialoguing. I want to hear from you guys. What are you going to do with it? I'm holding. Let's look at a few things. Tighten some stops. Who was left? Kevin or Craig, I think. Are you still in it? I'm so happy for you. It's great when you can just keep holding one. Carrie? In Amazon, IBM, MS, UPS. Okay, fair. Carrying IBM and MS. Good. Okay, so let's look at some of these things. Kevin, CME. Nice. IBM. Looking at PLTR. Okay, so IBM in, pulls back. What's it doing? Here's the deal. Here's another, and this isn't necessarily a rule, but it's a perspective. If you weren't in the trade now, would you consider getting in? That's more of like a validation thought process, right? That's a question I'll pose people who are like, what should I do with this? Right? And they want me to tell them, should they hold it or not? And obviously, I'm not going to tell you. I'll try to lead you to a thought process. So what's the question I ask? It's the same question I ask myself. We'd all love someone else to tell us, right? But when I'm looking at a trade that I'm in, and here's the thing, Corrine. She's like, I didn't take that one. Right now would actually for you be still a bit anticipatory. What would your entry look like? Just like we define other times. Oops, that's yellow. I don't want you yellow anymore. Let's go back to red. We look at something like yesterday's high and we say, maybe on Monday, if it pops like this, you're thinking, there we go. That's the buyers. And then what? And then we take this and we just go like this and we say, whoop. And there's our trade now. And we say there was a hiccup because we know life just doesn't exist perfectly like, oh, well, we drew our lines. Isn't the market going to go? We drew our lines. Like, we sure as hell hope it does. Sometimes I would say yes. For us in it, we're kind of like hoping as it goes. I would say I would label this anticipatory. I don't know for sure. I don't love it. I don't feel great about it. Now, here's the deal. My thought process was this. If I wasn't in the trade, would I consider entering it? My answer is yes. It is an absolute setup. 100% this is a setup. It's not triggered yet. If it was triggered, then there's no question. I'm like, whoo, I'm wiping the sweat off my brow like, all right, we got it. So for you might be thinking, what would that mark be that then is the trigger? So in it, valid. Thinking about it, valid. What's the signal if you're thinking about it? You're thinking about where's a mark, a watermark that I can say that's where the buyers have regained the control that looked like it did back here. Same kind of a thing here, right? In fact, interestingly, if I extend this back to here on this consolidation, that would be the same mark you'd be waiting for there. And you're saying, oh, it didn't fail, but it didn't go right. And then it shows up again. And there we go. I'd say 260 and a half, something like that. No. Yeah. So, and that's the same for any of these. We're going to see that's the pattern, that's the pattern on the SPY. Therefore, what are we going to see on, pardon me, MS? Even better, though. Now, this one didn't even get close to this support level. It went up and it just kind of hiccuped a little bit. We're not like, oh, it's not moving up my line. What am I going to do? It's early in the trade. We're in stage 2, waiting to develop. If on Monday it breaks up, what are we going to do? We're going to take this and we're going to be like, oh, and I'm actually going to move it up a little bit. And it's going to, I've actually already got 141 and change. So that looks fine to me. That's just a little blip, and we're going to learn. If you haven't seen it, if you've been with us for a while, you know the concept of hiccups. We talk about hiccups. We don't really talk about hiccups when the conditions are zeros and -2s when the market's nasty. We're like, we don't think hiccup. We think like, oh, get the hell out of here, right? But when we regain that bullishness and that momentum, and we're like, the buyers are there, but we can't just think that they're going to move predictably when we want them to. We're blades of grass, and that's the lawnmower. We're like, yeah, it looked like it was going to go, and it didn't. Am I going to go peek my head underneath to see if it's starting to go? No, I'll wait. We'll give it some space. Just the right amount. You can see it here. Just a pause. The door is open. The door is open for the sellers to push it down. And what have they done? Look at this volume. Nothing. No one is stepping through from the sellers. We just would like to see, no one wants to see increased negative rhetoric with the Chinese, right? It's like, can we just not? And then hopefully we do. And then I don't know. We'll see. MS. And let's go here. It dropped pretty low, but it's, again, here's the thing. If it's support versus if it's momentum, and you're saying once the momentum hits a certain point, I would always kind of be thinking, as I said, this area is going to be kind of yellowish. This area is going to be where it starts to be more insistent on exiting. And this is like a intraday, right? So above the red line is kind of like you're on your own, and you might. So Miguel said I stopped out. So he had more trades on. He's keeping a close eye on risk, and if the momentum breaks, it's done. I mean, that's it's not like there's only one way to manage these. We can go tight. We can give it a little space. That's the point, right? There is no this is the way. No, what do you mean? Everything's on a scale and a spectrum. Phenomenal trade management discussion, though, right? Remember, getting in's the easy part. This is where you make or break yourself as a trader. Okay, those are the 3, right? Is there any others anyone wanted to look at? We looked at IBM. Everything's holding up. Nothing's breaking. Everyone's a little bit it's not great, but it's also not wrong. That's the difference. Yeah, it's not what you wanted, but are you wrong? Those are 2 different questions. No, it's not what I wanted, but no, I'm also not wrong yet. I'm not just blind hope. I'm saying, look, I'm going to give this a chance. The sellers haven't done enough to convince me that it's wrong. The buyers are still there. Nothing's broken support. And we see hiccups play out positively all the time. And I'll tell you this, nothing worse than seeing it close and then watching the hiccup play out to the upside. Knowing that No matter what I do, that's going to happen sometimes. And every time it does, I'm going to be like, oh, I was in that one. PLTR. Let's go talk about that. Okay. That's Miguel's representation. That's a tough entry, though, right? I mean, it's a valid entry, but it's like everyone was wrong or red, and then it just sort of like bing. I think it's valid now. It's so big today. You hate chasing 5%. I hate chasing 5%. And you still don't even actually have a high momentum candle there. Happened to Walmart. Yeah, there you go, Corrine, right? We all taste it. We all know no matter what, we continue. It's just like, can we make it as infrequently as possible? That's the objective. That does look quite bullish though, doesn't it? Like, was that 8% earlier? And like I said, right? Can this, everyone, we think, oh, it's overbought. This looks nearly identical to this. It was overbought. It was starting to cross down. You had this going on, just like we had this going on. And then what happened? It broke out and it went from 30 to almost 90. Is there anything that's preventing that from happening again right now? Of course not. We don't think that. We don't think, oh, there's no way that can. There's no way. Oh, good stuff. When people say there's no way, I love that. I can go show you some of the craziest shite, to put it the Scottish way, you've ever seen. Someone says no way. Yeah, we know that there's always a way. And so is this possibly breaking out and ready to run? Yeah, we should certainly be like, hey, if I want to trade it, this thing could be on its way to 200. Right? Okay. Okay, so the trades we're in, we'll ruminate just long enough to learn on trades that we've lost. We'll put this on the right perspective and we'll get to the top of the wall. Let's go look at the VIX. Oh, okay. Let's talk about this. Let's go back to the SPY. Just kind of there's no trades, I don't think, right? We're not like, oh, we need to think about putting a trade on. Market posture. What did we get this week? We got a confirmed higher low. Right? From here to here, what happened? We bottomed out and we turned. That's a higher low. That's going to go up for me, 0.25. Great. Love it. Fantastic. What else happened this week? Let's go to the weekly on this chart. And if there's a trade that you want to see, that you want to talk about, even if you don't want to share exactly what your trade is, and you're just like, hey, can we look at XYZ? Throw it at me. We'll have some time. Again, we broke into this. Now we're thinking it's starting to consolidate. The consolidation right now is more of like a flaggish type pattern. We'll see. I mean, you can see again, it's overbought for sure. But we've seen overbought just continue to stay overbought. And when those overboughts stay overbought, here's another one back here. What happens? Zoop. Here's one back here. What happened? Zoop. You may not have known that's the sound the market makes. It is. Zoop. But is there anything new here? No. No, we're waiting for confirmation of a consolidation and a turn. If it's in a consolidation, it would have to break out before we could score it. Otherwise, we're going to assume it's going to consolidate. We'll see how much. The next time we get one of these, then we'll give it this. Or if it breaks the flag, then we'll give it this. Those are the next two ways I see a possible increase in my long-term score. It's good that we came off this in a V style. That was nice. But I think the fact that we haven't seen anything else since then means we're not out of the woods just yet. A 3 is pretty good. It's a lot better than a 0 and a -2.5, but a 3 is not a 4 or a 5 or a 6. So we'll still be somewhat measured and tempered in the way that we evaluate and take risk. I will. Okay, VIX. Back to 6 months. Let's drop the extra time back to 7. And change it to the right symbol. VIX. Oh, it's dicey, but it's not enough. What am I concerned with here? Low? Come down? Now, it's here, right? It's here. It really would have had to have crossed and held above that top. And then I'd be like, oh, we've turned. So what this is saying to me is there's still some hope. You can see down below it's pinched, but it hasn't crossed. So I look at this and think, am I sweating a little bit? Am I feeling it a little bit in my tum-tum? Yeah. Are you? Probably. I don't love it. I think, but I'm going to rely on the fact that the institutions know more than me. And despite everything that's going on, this is still sitting at a 19. So whatever else there is not a surge in fear or even a pattern of fear escalation that for me triggers automatic hedging. If you have a hedge, carry it. Probably makes a lot of sense. If you don't have a hedge and you have a heavy portfolio, more than 3 trades. If you only have 3 trades, you have some tight stops. I can't see it hurting you too much. But if you're like, oh, I'm a little bit nervous about it. What are you thinking about? Puts. Yeah, even if you bought them for the weekend. If you're too worried now, if it gaps up, those puts will take a loss. You'll have to close them quickly and then see right? So that's so for me, let's pull up the posture. Boom. Let's get ready. Wait, what did I do? Copy. Insert. What will Sunday be? June 1st? Oh, that's crazy. That is crazy. June. Nope. Come on, Scott. June 1st. June. First. That was way harder than it should have been. Long-term trend staying. Short-term trend getting another quarter point. Oh, we forgot to talk about volume. Let's go back. VIX. Nothing. Let me see. Actually, I'm wrong. Because we didn't have anything else, the VIX is getting. We are getting a quarter of a point. 1, 2, 3, 4, 5. So again, from right here, what happened? We went a little higher, but it was still lower than this. So from there, when we completed that and turned lower, that became a lower high, quarter of a point. And now we're continuing to hold it, hoping that it just continues dropping until it gets at or below this previous level. And we're like, woo, because then we got some bullish action in our favor. But am I holding for that because of this? Yeah. Quarter point there. I think our market posture, let's go look at volume. I think volume is going to stay the same. Let me know if you have any thoughts on that. Look at us getting positive. Now, even if the volume is going to be above average, probably. We're at 65 average. It's at 60 now. I bet we'll get to 72 or 3, which will be more than 5% above average or above average. That means it'll trigger a shadow box. But whose shadow box? Unless it gets up to 0.5%, and right now we're only up 0.12, then it's going to be for the tires. Then it's going to be the tires, buyers, tie, Scott. Then it's going to be a tie, just like this one was. Above average, barely, but nothing happened. Today, if it gets above average, but barely, what would we say? Nothing happened. It's all in the same place it was. They got credit for this, and it hasn't done anything since then. So there's no credit due. Volume stays the same, but it's still better than not. So it's still positive, 0.5. And I would expect with some surges in NASDAQ that maybe we get a little bit more there. I think we could end up, if we go back to that, that goes up, that stays the same. No. That goes up. That stays the same. That goes up to 0.5. And I bet we see 0.25 come in here. 3.25? That's my guess. Anybody want to put a number on it that they think? I think we're going to move up into firmly, slightly bullish. We got to get above 4 before we're like, okay, that's really like bullish. And then we start to see 4 to 5, and then we get to 6, and we're like strongly bullish. I should create like a market meter thing with a dial. It'd be fun. Okay. Questions, comments? What do you think? So what does that do? A couple of things. We have a pattern that we've defined as a hiccup that we've said, if you're in a trade, you're not wrong. So do you hold? Well, what would make me more likely to hold versus less likely to hold? If I came here, and this is why I do a market posture preview. It's not just to be like, let's just look at it and think what we're going to be. It's to be like, okay, knowing that we're likely going to score this market even stronger, that helps me have a bit more confidence to go ahead and hold the trades, right? Contextually, if I looked at this and I'm like, oh man, my score is dropping from 2.5 to 1.5, and I had those 3 trades, very different. I'd be like, you know what? I think I'm actually going to just pare them down to 50%, take the loss and keep it really small. It's very small. There's not a huge loss. And then carry the other half and say, I still have a little bit. I still have some prospects to get back that loss and make money. And if not, then everything is right. So we have strategies that we can implement if it was a diminishment expectation in our market posture score, but that's not what it is. We have an expectation of an increase. So for me, that's further justification to say, yeah, I'm gonna keep those trades. John says, I don't feel, in quotes, more bullish. I love you put that in quotes. So we'll pay attention on Sunday. Interesting, right? And there's times where I'm like, I do feel more bullish. It's like when I would ask my kids, how did you feel about that test? They're like, I felt great. And then they get like a C. You're like, what? Right? There's times where I'm like, oh man, I really feel like the score's going to jump. And then I come in, nothing. Right? It's like nothing got better. I'm like, there's something some bias, something happened there. Whereas there's times where I think, oh, it's going to drop. Nothing happens. I mean, it's an interesting thing. I love your perspective of open-mindedness for that. Right? I'm the same way. I like to come in and think, what will I likely be? But I'm going to try to be open. I don't market. I don't think, well, let's market. So no. When Sunday comes, I'm just like you, 2 days away from the market. My chimp's in the cage resting comfortably, sleeping, and I can work. There's a lot of activity still as we speak. A lot of chimp activity with the trades on and what's going on, right? So we have to be careful about that. Let's go through the whole watch list. I love these chats. It's a funny thing because I know I'm like saying it, but at the same time, it's like golf, right? Like, someone could be a golf pro who is teaching people at there's plenty of people who are better golfers than them, but there's still times that, they get in their heads. Professional baseball players go on where they can't hit. Poker players go on tilt. Like, there's no thought that a lot of times, I think what I'm saying also is helpful to hear. So I try to keep that same open mind. Day trade opportunity. I don't feel like there's, let's hit that with the VIX and then we'll move on. For me, but I would echo that question to Glenn, who is more of a day trader by nature. But for me, sub 20, sub 25, is, if we were above this point here, I'd say 22.5 is kind of my threshold. You pop back above that, you're going to have way more opportunities than if you stay down in these low 20, high teen range, right? You can see that even though there has been a bit more, I still feel like there's de-escalation here more than anything else. Why is that? Remember that this is volatility. Another volatility measure that is very closely correlated with implied volatility is ATR, average true range, which is a composite indicator. There's 3 different things it looks at. It's like yesterday's high to today's high, yesterday's high to yesterday's close to today's close, yesterday's close to today's high, yesterday's close to today's low. It takes the highest one. That's why it's an average true range. It's not just one measure. And then what it does is it plots that. Here, let me show you. We have time to still get to the watch list. We have time to scratch. Nope, that's the wrong one. Let's go here. ATR. Add. Okay. Well, you'll notice, look at the correlation between ATR and implied volatility, right? Swells up, comes back down. Well, when we're above 25, the ATR was between 5 and 8, right? You make a lot more money day trading when there's a and this is on the VIX. Let me actually go to the SPY. That's more indicative. This is the same thing, same correlation, right? So that period of time is back here. How much is the VIX moving? Well, it was 13 to 19 a day back there. Back here, when it was slightly elevated, it was 8 to 10, right? Right now, we're sitting around that mark so that we're thinking to ourselves, if it does do, it's nowhere near this 12 to, this is the best day trading time because look at the size of these candles, right? Look at the size of these candles. Back here, when it was 8 to 10, look at these candles. When you see things like this, right? There's not as much meat there for you. So the VIX is a great natural representation of expectations for daily swings. When we get a higher low, we think that means we're about to start seeing bigger daily ATRs. If you're expecting to see, think about it like counting cards, right? You still have to actually play hands and bet. It's not like there's just free money. Right? But when you count cards, you realize, you know what? Things are actually a little bit more favorable for me. And so conditions for day trading are more favorable for you. It's like a high 10-card deck count for blackjack players. When there's bigger ranges to trade, you're more likely to catch those big swings. So you can get 3-to-1s on your day trades. So there it is. But again, check it with Glenn. Make sure he says the same thing, because he is definitely more of a natural day trader. Yeah, good discussions today. Yeah, if we can't trade, what do we do? Learn. Corrine, don't even get me started. She brought up Beat the Dealer. Beat the Dealer is written by a man named Ed Thorpe. Ed Thorpe was actually friends and slight co-worker proximity associates with another guy named John Kelly. And if you go look at our record-keeping spreadsheet, you'll notice there is a row for Kelly Criterion. Such an interesting story. So here's a different book called Fortune's Formula, and it's going to tie all of it together, right? Another market wizard that trades this model is oh God, you guys, I need to say this stuff more frequently. Trading Tribe. What's his name? Trading Tribe. He's from the original Market Wizards. Oh, I can't. Ed Seykota. Boom. Pulled it out. Ed Seykota. Anyway, this is like magical stuff that we try to get into. So Kelly Criteria. So anyway, the Fortune's Formula story goes into how Ed Thorpe he's the original guy. The matrix, if you've ever been a blackjack player, there's a matrix that you have to memorize. That's like an if-then, right? If you have this and the dealer has this, you hold, you split, you double down, you take a card, so on. So he's the one who built that based on, probabilities. Like that's, literally he wrote the book. That's the book that talks about that. But the other thing is he started to count cards, where if you notice that there's a high number, then it becomes an edge. If you go to the Beat the Dealer book, there's a chapter in there for risk management that will blow your mind, that we try to emulate. And Seykota, that's exactly the right spelling. And it'll blow your mind about, I think I even have it in a PDF somewhere. Maybe I'll post it. But yes, it's not about counting cards. It's about counting cards. And then how do you bet as little as possible when you don't have an edge, and then what's the optimum bet when you do? And we should be trading with an edge all the time. We don't wait to, are there times where we have more of an edge and less of an edge? Yes. What is that? Market posture. So when we have less of an edge, what do? We dial back our risk. And when we have more of an edge, what do? We raise it up, because we know that our expectancies, and therefore our Kelly criterions, are higher in stronger market conditions. Everything has a purpose. And so then that's what leads us to Kelly Criterion. So anyways, Ed Thorpe went to Vegas, made a bunch of money, got taken down into the basement of some casinos by some Italian guys, talked about how many holes they have that they're now finding out in the desert. They very politely said, don't come back to Nevada. He tried it in Atlantic City. Then he's like, you know what? I think I should maybe just try to do what I do in the market. And his next book was called Beat the Market. So he stopped blackjack because then they started six shoe decks, or 6 deck shoes rather. Sorry, single decks they still have like out in Wendover, Utah, in some casinos if you ever wanted to. Anyway, good stuff, right? You have no idea the fascinating stories that exist. Fortune's Formula, great book. We got to crank through the watch list now. You guys are rabbit holing me. Oh, there it is. Look at Corrine. She's brought her A game today. Love it. Super good stuff. Apple, hiccup. ABBV, hiccup. What's the pattern we're noticing here? Oh, look at, right. Oh, sorry, guys. I'm kind of blitzing my mouse because now I feel like I have to go fast. But the pattern is similar across the board. Bullish, consolidation, start the bounce, hiccup. There's nothing you can do with that. If you're going to trade it, you wait for the buyers to actually come in and you say, okay, then I can put another couple positions on. If next week it goes this way, then we're going to stop out and we're kind of just sort of teetering there, right? So could it get more bullish? Yes, and we could put more on. Likely to hold what we have. That's my thought and why I have that. APH still looks good. Bank of America hiccup. Caterpillar hiccup. See, some of them are worse than others. So some of these might be stopping out if they get a little bit worse. That makes perfect sense. CLS is actually a setup. That was never one for me, but now it's getting there. So for early next week, am I still like, hey, my posture is likely to improve. So yeah, we should still be thinking bullishly. Don't get scared away from anything. There's Kevin's trade on CME. The rest of us booked some solid gains, I would imagine, though. Cisco, that's a setup. If you looked for something more tech-oriented, that's still a hiccup. Yeah, the vast majority. There's a debt out here that needs to be collected. I'm waiting for an opportunity to develop. I'm not going to rush it. Debt collection is best done cold, is what I hear. I don't know. That's just what I hear. So, anyways, we'll be patient. Flex is a hiccup. GE Vernova, set up. Aren't you guys glad how we moved away from any concept of a revenge trade? That doesn't exist. Not here. Right, Sandy? You got it. Sandy knows. She's picking it up. Goldman, actually, I feel like looks the same, but Morgan looks a little better. It's just anywhere you look, you're going to see the same thing right now. Sometimes it's a funny thing. I heard this once, that there's only 6 stories. Every story fits into one of these 6, like broad. Maybe it's 7. If anyone knows, correct me. It's a little bit of trivia, right? Where it's like there's this story, like a revenge story, a rags to riches story, right? Like it's, and some of them blend it, but there's only 6. And if you look at charts, there's really only 4, I think. At any given time, you have a tendency to be able to find where you're like, well, if I go into precious metals, I'll find a different chart. So commodities might offer something different. If I go into like something bond related, but in equities, you're usually going to find like 1 or 2. Right now, there's like 1 chart. Everything looks almost identical, at least on our list, and we look at bullish things right now. Hiccup. No time for a Hail Mary, right? Nope. MasterCard? Okay, so MasterCard, I feel like maybe I should have, and now that's one I said I'm willing to do 2. I'm willing to take a debt trade in addition, and I didn't. Did anyone put on MasterCard or Visa? So I don't know about that. Meta is trying to come back. There's Morgan Stanley. It looks fine. Microsoft, hiccup. Hiccuping on NVIDIA. Maybe an opportunity. Okay, so PLTR. If we missed it, what are we thinking? Next opportunity is setting up right here. There's our previous low. We come off a good earnings report, a market leader. There's the box. If a trade develops in here, that's easy for us to want to take. It's a hiccup market. Everybody knows that. Palantir is back up 7.5, Miguel. It's okay. I always used to tell people when I would introduce myself, I feel like I'm 1/3 coach, 1/3 therapist, 1/3 bartender, depending on the day, right? So sometimes we're learning. Sometimes I'm like, well, how did that make you feel? When that did that, how did that make? And sometimes I'm just like, yeah, I've been there. I've had them. And it sucks. Let me pour you a drink. Well done. Okay. Love it, John. Thank you for sharing. Appreciated. Oh, Philip Morris. Thought it was going to consolidate. Then it decided not to. Hiccup. Roblox, I wanted another chance at, and I never got it. And there it is, higher already. I think we got to be patient. Rivian is actually now hitting a point where we have to decide, is this a pullback or is this a sell-off? It's running off a pretty good high, which is its highest high, but let's just say that's a giant cup. Sorry, that was a horrible line. This was my last low, so I'm still okay. It's a volatile stock. It's a mover. But I wouldn't let it get below 14. I would still say I'm okay with it for a turn. Because if it gets down to 14.5, even just returning to 17 is a viable trade for us, right? Even if it's just like completing the handle, and then we're not sure. Let's keep our eye on that one. What's the volume? See, now look at that. We're 3 minutes away. There's not a big selling volume there. This is still consolidated volume to me. Rocket Lab, trade set up. Beautiful. We've got setups for next week. Setting up already. RTX, actually, if you were looking for a new trade, that's a viable trade. It's real volatile, though. Real volatile. 3 minutes to go. Is he going to finish on time? SE, setting up. SPY, holding up. TPR, hiccup. Hicking up. That's not a thing. Tesla, there we go. Hiccup. That's a Brit. Now there's where it's like it tried, and we looked at this one. I don't think it ever really gave what we were looking for, and then it just fell apart. Visa. Again, we had I don't know, Scott. You're going to have to go back and listen to the tape. I'm going to have to go back and listen to the tape as to why this did not generate enough. I really feel like that would have been what we were looking for. Probably about there. Yeah. All right. Sideways on Walmart now. That's the watch list. I think we're fine. I think our posture looks like it's improving. I think we're not. It's nice to hold in the VIX in the teens going into the weekend. Nope. Let me see. What am I looking for here? Trading plan outline. Last chance between now and Sunday to make sure you have at least one really strongly developed trading system. If you have one strongly, then get one loosely that you're paper trading, that you're developing into strongly. And then you have two strongly. That's the way that we do it. We start by exploring the rules and paper trading them. Then we refine them. We get them to a point where we say, yeah, I'd be willing to put some actual money in this. And then now it's a system that we're moving forward to trade. And then next week, we're going to move on to our risk management section, which obviously has critical importance. And there it is, finishing at the bell. Amazing. Like today was a lot of fun. It flew by for me. Probably a little bit slower for you guys. But what's the takeaway here? I feel good about what we're seeing. Bullishness is holding up. Underlying conditions show improvement. We have a hedge signal developing that if it triggers, we'll do it. I'll put it out as an alert for sure. So watch for that. Super cautious optimism. And that is the title of today's presentation. Fabulous. Weather's nice here. A little warm already, but I don't mind. Cools off at night, so I hope it is where you are. Enjoy your weekend. Have a great one. We'll see you in... I always forget what the amount of time is. It's not quite 48 hours. 43 hours. 90 in Florida. There you go. And humid, too. It's dry in Utah, at least. I like the dry. I'm a desert guy. I can't handle humidity. I like it dry. 43 hours from now, we will reconvene. And we will formally discuss market conditions. Thanks, everyone. As always, happy trading.